think, act, and prosper. You are now tuned into the Money Level Show.
All there. So I'm going to go ahead and share a chart of gold. All right. So gold's hanging out in the 2680s today. And I mean, it's just been on a tear. I had put I do a little bit of technical analysis, but I put a Fibonacci tool on it, and my target was 2,700, a little over 2,700. We're approaching that. But, just looking at the RSI down here, I mean, it was technically overbought and then, came down. It's still overbought territory, but this is the physical commodity. I mean, you got central banks. I don't think central banks really care about.
Can you zoom that out to get 2011 in there and see if the RSI got higher? I don't remember that off the top of my head.
Yeah, let me see. Let me go ahead and go to the.
That'd be like a 15-year chart.
Yeah, I'm going to the monthly chart. Yeah, so here we are back in 2011. It was this high.
Oh, look at that. It was higher when it was lower.
Yeah.
Okay, so that's interesting. I haven't looked at the RSIs. I'm not a TA. So it looks like from those previous peaks, the RSI is high, but it's not at the peak levels that we've seen before on some of the big corrections.
Yeah, exactly. And obviously today's macro environment.
but look at that. That's not just a hockey stick. On that scale, it's going vertical. But yes, so
yes,
what's the question?
But yeah, I mean, today's macro environment looks a lot different. I mean, central banks are buying a lot, and there's many other catalysts here. Fiscal deficits are way higher, national debt's way higher, and this isn't something that, I mean, from you and I's conversations before, like, this isn't like a trade. This is the physical metal. This is insurance. This is like savings.
Yes.
But just wanted to get your take on what's happening with gold. Do you see anything new here? I mean.
Yeah. Okay. So if you keep the chart there, zoom out a moment, because I want to say one more thing. Yeah, but that's fine. No, that's good. If you look at this as a cup and handle type pattern, like from 2012 and the down the cup and then the handle from 2020. And I'm not a TA, but if I recall correctly, I've heard TA say that if you get a breakout to the upside from a cup and handle pattern, that the upside on average is like 50% or 60%, something like that. So a breakout to the upside on the handle from 2000, if it's 50%, let's say, that implies a $3,000 peak. Now, I'm not a TA. I don't know if that's right, but just thinking about things that I've heard, since you've got the chart there, it looks like a cup and handle to me.
Yeah, it does.
So maybe a TA could say in the comments or whatever what the correct answer is, but whatever the typical cup and handle breakout, like if it goes up instead of down, maybe that's one way to look at this. Another way to look at this is if you look at the peaks, the 1980 peak, and this is ancient history, but it's interesting. We're just playing with the charts. If you look at the 1980 peak at 855, and then you look at the 2011 peak at 1911, basically the 2011 peak was twice the 1980 peak. So if you had twice the 2011 peak now, that would imply 3,800 gold. Now, I don't know if we go there without like a serious breakdown in the United States dollar or not, but the reason why I'm bringing this up is because it's things like this. Gold, when it goes into a mania, and honestly, as vertical as this chart looks, the hairspray heads on mainstream financial media. Sorry, I shouldn't be ad hominem. The respected journalists on mainstream financial media are even just barely beginning to talk about gold and ask about gold. You can't just have all-time high after all-time high, even if it's just nominal, without financial media noticing and saying something. So it's not just the occasional guest now, the actual hosts on these shows are starting to say, well, what about gold, right? Because it's just too powerful to ignore. In my view, that's not a sign of the top. They're just starting. They're just, like pulling teeth, just dragging them into the point where they're deigning to recognize that it even exists, let alone that it's in a bull market. So as scary as that chart may look, oh my gosh, it's gone vertical, right? It's got to come back. All the fundamental reasons for it that I can think of are bullish. Where the Fed is going to rate loosening cycle, that's bullish. I think we're going deeper into recession, that's bullish. You've got the central banks buying, that's bullish. You've got two hot wars, either of which could become World War III, that's bullish. I mean, I just don't see the fundamental in front of us that says, oh, well, gold needs to go down. So not being a TA, I'm happy to bet on it going farther up, and I am doing that with my own money. How far? I don't know. Do I feel nervous about that chart right now? No, not really. I mean, I don't see the trigger. I don't see anything that says that never mind the chart, but like in reality, that supply is about to catch up or the demand is going to falter. We're in a scary world right now. It makes sense to me for gold to be ripping. So no, I'm not worried about it. If we get to around 3,000, right? If that cup and handle thing or some, that's not a price target, but maybe that's a level where I'll start to feel a little bit nervous or more inclined to take profits as they come. But who knows how high this thing goes, Daryl?
Mm-hmm.
Certainly not me.
Would you ever take profits on physical, or are you
No.
most referring to the equities?
No, definitely equities. Well, a couple of things. For physical, I agree with JP Morgan. Gold is money. Everything else is credit. When I save, as you were talking about in your question, when I save, I said, I buy, I don't store, I don't invest, I don't speculate. I save in gold. That's my long-term savings. And so people say, well, how much gold do you want to have? Or, what's the ideal allocation? It's like asking me, how much money do you want? What's the ideal amount of money to have? There is no top to that. I want to save as much as I can. And no, I never liquidate that or take profits because it's not an investment. It's savings. Do you take profits on your savings? I don't think so. Right. So that's just not the way I look at it. The stocks are something else. When do I dip into my bullion? Either like some financial catastrophe and meltdown. I have had personally a financial disaster in my life where I sold my coins to feed my family. That's actually happened to me, where I dipped into that insurance as it was intended. I've also dipped into bullion to finance a house purchase, right? That's what savings are for. So that's when I do that. As far as the stocks go, there's two answers. If I got the feeling that the market really was toppy, then yeah, I could see taking more profits, or if the fundamentals shifted in some way, yeah, I could see taking more profits. But you never know how these things are going to play out. So I have a way of dealing with this that doesn't require me to know, what's going to happen next or to time the top of the market perfectly. I call it the upside maximizer. You've probably heard of it. It's another free download on our website on the free reports area. And basically, it's using a stop loss, a trailing stop loss, but instead of using it to stop a loss, because on super volatile junior mining stocks, that's difficult to do. It's very counterproductive, actually, in most cases. But using that same mechanism to stop a gain from turning into a loss, having that ratcheting stop loss on a big win prevents that big win from going away. Mm-hmm. So how does that work? You can read the free report, but basically this takes this whole burden off my shoulders. I don't know how to tell you when the market's going to top, but I don't have to. If I have an upside maximizer on one of my winning positions, then if it rolls over significantly, not a little normal fluctuation, but it starts moving in a big way, the decision is made for me. I know what to do, and I can prevent that big win from slipping through my claws.